Now, John, I know historically, and in fact, some of the people listening to this interview today would have been invested in projects like ICM 7, ICM 9. You used to have numbers behind your projects or funds, if you will. And correct me if I'm wrong, but the model was basically you raise some capital, a specific targeted number of or amount of capital, and then you target a specific asset class, be it office buildings or a specific type of commercial assets that you're purchasing. And then that ties up one fund and it's kind of closed off. You do a kind of a buy, fix, and flip over on a much grander scale. Then you liquidate the assets and the investor sees a return on that investment. That was the traditional model. You've since transitioned, and now we have the Property Partners Trust. It's ICM PPT. Tell us a little bit about why you transit. First of all, what is Property Partners Trust? How is it different than the previous model? And what are some of the reasons you guys transitioned to that model?
Yeah, I mean, ultimately, it was a better fit for the investor profile that we're investing in our closed-end funds, and we believe that because ultimately, an investor's need for liquidity is going to vary greatly by investor, and ICM Property Partners Trust allows people to invest and redeem out to create liquidity for themselves at any given point in time thereafter, and what that means ultimately is that the gains that we realize on projects along the way are embedded in the underlying value of the units of the trust that investors hold. So when they redeem out, they eventually realize the gains that they've achieved. Obviously, there's a distribution paid in the meantime as well. Where historically what we employed were more closed-end funds, which, as you suggested, we raised a defined pool of capital, deployed it, and as soon as we liquidated assets within that portfolio, we would return that capital to the investors. So that model, put us more on a treadmill, if you will, where we're continually having to trade out of assets, return proceeds to investors, raise new capital before we're able to identify and invest in new opportunities. This open-ended structure that is Property Partners Trust is much more flexible in that context and allows us to better position investors over time for success.
Yeah, and I also noticed there's a bit of a shift in the makeup of the fund as well. Whereas before you might have focused on, I know, like for ICM 7, for example, was specifically commercial office space. Now there's three key components or strategies, if you will, to Property Partners Trust. One is income and growth, the other is development, and the other is high yield lending. I'd like you to speak to that in terms of how that works with each of those different categories, because again, it's not just one thing. You're not just buying apartment buildings or office buildings or lending on mortgages. You're doing three different strategies. So tell us a little bit about maybe the percentage breakdown on that within the fund, and some of the thought process behind why you went in that direction.
Well, I mean, really, it's we have the ability to invest along the capital stack in real estate and across different property types as well, and we believe that that's of benefit ultimately to investors because we've been doing this a long time, and retail investors notoriously end up being the last invested in what are the next great opportunities by virtue of the structures that they have available to them through which they invest. And what Property Partners Trust seeks to do is to pool the capital of those investors and allow us the flexibility to identify where we feel the next great opportunities are in real estate. So we shifted a couple of years ago to industrial and industrial development most specifically, and we'd spent a good year building a pipeline of opportunity before the pandemic hit, and that's allowed us to add a significant amount of industrial to the portfolio in the last 12 to 15 months, where previously it would have taken us 12 to 15 months to make a first investment if we'd only shifted post-pandemic. But that's where the opportunity was in our minds pre-COVID, and it's become immensely clear to anybody following real estate that industrial has been where the opportunity has been, and it's become even more pronounced than it was when we first began focusing on the space. So, we feel that the Property Partners Trust structure is a valuable one for investors because it allows us to transition the portfolio over time and continually evolve where we're investing to try to capitalize on the best opportunities in market.